Ladies and gentlemen, good day and welcome to the earnings call of National Aluminium Company Limited, NALCO, post-declaration of the financial results for quarter and half year ended September 2025, hosted by Systematics. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shweta Dikshit from Systematics Group. Thank you, and over to you, ma'am.
Thank you, operator. Good evening, everyone. On behalf of Systematics, we welcome you to the 2Q FY26 and first half FY26 earnings conference call of NALCO Limited. I would like to thank the management for giving us this opportunity to host the call. I now hand over to Mr. Bharat Sahu, Company Secretary NALCO, to discuss the company's financial and operational performance for the second quarter and first half of FY26. Over to you, sir.
Good evening. Namaste. Greetings from National Aluminium Company Limited in Navratna, CPSE under the Ministry of Mines. I take pleasure in introducing NALCO team in today's post-earning call. NALCO management is represented by Sri Vijendra Pratap Singh, Chairman cum Managing Director, Dr. Tapas Kumar Patnaik, Director HR, and Sri Abhay Kumar Behuria, Director Finance. Myself, Bharat Kumar Sahu, Company Secretary of NALCO. Today, NALCO published an impressive Q2 and H1 results after the board took it on record in the meeting held in the forenoon. A present this regard is already uploaded in the website in both the stock exchange site as well. And now I'll request our CMD sir to kindly highlight the results and the outlook of the company. Over to you, sir.
Good evening, everybody. Myself, BP Singh, MD NALCO, and with me, my Director HR, Dr. Tapas Patnaik, and Director Finance, Abhay Behuria is there. We are very glad to inform that with the dedicated efforts of all the employees of the NALCO, we've been able to record best ever Q2 and H1 performance, both in the terms of production and financial. Our Q2 performance and H1 performance has been excellent. If you see Q2 performance, like to like Q2 24-25, our excavation, bauxite excavation increased by around 13%. Alumina production increased by around 15% Q2 compared to last year, and cast metal production also increased by around 3.48%. Our overall revenues from operation increased by 7.27%, and expenses reduced by around 3.34%. Overall, if we compare PBT and PAT, we see around 34% increase in PAT is there compared to Q2 last year. If we compare H1 performance of last 24-25 and H1 performance 25-26, there is a substantial jump in that. Like excavation has increased by around 6.25%, bauxite excavation, calcined alumina production has increased by 31.33%, cast metal production has increased by 3%, revenues from operation has increased by 18%, our profit, PBT, profit before tax, has increased by 47% and PAT by around 50.2%. The alumina sales has also increased by around 81%. The major contributor, if you see H1, compare H1 of 24-25 and 25-26, has been the increase in volumes. Our alumina volume has increased substantially, and our efficiencies has also increased. So increase in volume has given us around 700 crores and efficiency has given us around 300 crores if we see compared to last year H1. So that is the performance, and we are continuously striving to improve the performance of the company. Our expansion plans are also there. Our refinery expansion is there. Almost 80% of the expansion is complete, and we are planning next year, June 26, to commission the refinery, 1 million ton refinery, wherein our existing refinery capacity, which is around 2.1 million ton, will become around 3.1 million ton. And in smelter also, we have a plan of expansion that in coming days we are going to plan, which is we are planning to bring a 5 lakh ton smelter in next 4 to 5 years by 2030. So we are having a robust, very good result, both in terms of physical and financials. Any queries from any questions from the participants who are there in the conference call? We would like to take on the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Amit Lahoti from MK. Please go ahead.
Yeah, thanks for the opportunity and congratulations on a good set of numbers. So my first question is on alumina, where we are doing the expansion project. Are we on track to achieve commissioning in early FY27 as per the previously guided plan?
We're not getting you properly. Can you be a bit louder?
On track.
Of course, our fifth stream plan, expansion plan, earlier it was scheduled to be completed in September 25, but it has got slightly delayed, and now we have our revised target is June 26. Already we have revised it earlier. Now we are on track, and whatever timelines of June 26 we have taken, we'll commission it in June 26.
Okay. As my second question is, we sold more volumes in Q2 than in Q1. What is our inventory management strategy here? Could we see more sales volumes in Q3 as well, more than the production numbers?
You're talking in terms of alumina?
Yeah.
Alumina, as far as our alumina sales are concerned, whatever production we are doing, our around 50% of the production is getting consumed in the smelter. Rest of the production is to be sold in domestic and export market. Of course, export is the main market we are doing the selling. But our inventory, which we have a carrying capacity of around 75 lakh tons in our Vizag silos and around 36,000 tons, 75,000 tons in Vizag and 36,000 tons in Ramanjodi. So we cannot store a lot of material there. So we have to, whatever we are producing, we have to sell it. So on an average, we are planning that 4 to 5 shipments per month will be exporting to outside, and our domestic sales will be around in between 10 to 12,000 tons in the remaining months.
Okay. And lastly, do we have any hedging volumes in aluminium, any hedge in volume and prices?
No, we have not gone through that area because most of the product of aluminium is our domestic sales. So we have not tried to go for the hedging because our price mechanism is very transparent and based on our LME. So that we don't feel is required for NALCO now. So we have not gone into that territory now, hedging.
Okay. Thank you and all the best.
Thank you.
Thank you. Our next question comes from the line of Aditya Welekar from Axis Securities. Please go ahead.
Yeah, sir, thank you for the opportunity. My question is with respect to our fifth stream of alumina refinery. So how much are we targeting for FY27? In earlier call, we had said a number of 5 to 6 lakh tons. So is that number intact, and can we expect a full ramp up in FY28?
Yes, that will be the full ramp up is there, and whatever we have planned of 5 lakh tons, that will come because in June when we will commission, we will be having around 8 to 9 months in hand. So 5 lakh tons is the plan which we are having now also. And FY28 will be the full ramp up.
Understood. And coming on the smelter expansion, so in the earlier call, you have said that we will file for DPR in next 2 to 3 months. So at what stage are we? Means, is the DPR ready now or it is pending?
No. In the earlier call, whatever I have told, that was not 2 to 3 months DPR preparation. That was the appointment of consultant. Our plan as of now is that both for CPP and smelter, our DPR, we have appointed the consultant for CPP, and DPR for consultant for smelter is on the process. This month it will be appointed. They will be taking 6 months to make the DPR. Our plan is 26 June, maybe June, July, the DPR will be ready, and we'll take it to the board. And after board approval, we'll start the tendering process and complete the all ordering by 27 March. And after that, the actual groundwork will start. And from there, 3 to 3.5 years will be the timeline for commissioning of the plant. In somewhere around 2030 last, December 2030. That is the plan which we are having.
Understood. So basically, our capex for that smelter will kickstart from 27 onwards, right? Is that understanding correct?
Yes. So start from 27 onwards, yes. In financial year 27-28, it will come.
Right. And what will be our guidance?
3 to 4 years.
Yeah, go ahead, sorry.
Total capex involvement.
Yeah, so for
total capex involvement for smelter, the capex required will be around in between 17 to 20,000 crores, and for power plant it will be around 10 to 11,000 crores. So combined, if we see, it will come to around 30,000 crores.
Right. So from the first, from FY27, on a ballpark basis, what kind of capex means we can expect, we can build in, and what will be guidance of capex for 26, FY26?
Hi. Yes, a very good question. If you see the balance sheet and net worth of the company and the cash generation being made from every year, and presently we are having, end of this September, we are having a cash balance of around, cash and that is total cash and equivalent, cash equivalent, it is 7,900. And if you go on earning profit in this rate, then we will have a balance of near about 20,000 plus. But we don't think our requirement is 30,000. Okay, if there are two models we are now interpreting to go for this capex. One is smelter EPC and power is JV. If you go the project in EPC mode, we may need at the end of the year 27, 28 or 28, 29, the requirement of fund will be around 5 to 6,000 crores borrowing fund, because our cash balance will take care of the intermediate payment. If you go to the second model, EPC on smelter and JV, 50% JV power, then we may not require any outside fund support to finance our project. This is as of the projection which we have made.
Okay, sir. Understood. Thanks a lot. Thank you.
Thank you.
Thank you. Our next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity, and congratulations on good set of numbers. Sir, just coming back to our alumina sales, so we probably have brought down the inventory now. So how should we look at the second half total alumina sales with this annual guidance? Hello.
H2 also, our whatever our alumina sales, like H1, we have done the sales of around 7 lakh tons. So H2 also, our overall yearly plan was around 12 to 12.5 lakh tons. So H2 sales will be around maybe somewhere around 6 to 6.5
lakh tons of sales will be there.
Noted. And how should we look at the average prices, spot prices versus the average you have seen in the 2Q for both aluminum and alumina?
Average prices, if we see in Q2, the average price which we got was around $380. But as of now, as of date, the spot prices are around $320. So H2 we are expecting somewhere, if it is slightly favorable, it will be somewhere in between 320 to 340.
Okay.
Alumina. And if we if we see metal LME in the Q2 was around 2597, around 2600, and in the remaining, as of now, the LME is around 2850. So the projection is there, it will go to 3000 also, but it all depends. We are expecting that in H2, the LME will somewhere be in between 2800 to 2900.
Noted. Sir, any progress we have made in the Kabil joint venture which we have tried in the Argentina or any other rare earth metal? Because there's a lot of buzz that we are looking to some of the rare earth metals. So if you could give us some idea about those segments.
As far as Kabil is concerned, Kabil, we have got 5 mines in Argentina, and this all 5 mines non-invasive exploration is complete. We have done the non-invasive exploration. After that, now we have to go for invasive exploration. The results of non-invasive exploration was good. Non-invasive means we do it from the surface, from the top. Now we have to do the drilling and see the actual depth where the lithium is available. So for that, the appointment of consultant has been done. This consultant is going to appoint a exploration agent, which will be done in next 1 or 2 months. This exploration agent will start the exploration, and next 6 months we'll be knowing the results, at what height, at what depth the lithium is present. After that, it is the responsibility of exploration agent to set up a pilot plant. They will set up a pilot plant there, and the result of the pilot plant regarding the grade of lithium and the commercial mining, that will come in next maybe 8 to 9 months. Means next 1.5 years, we'll be able to know whether the commercial mining there is possible or not. But since there is already operational mines there, the Chinese mines is already operating in the nearby area, we are quite hopeful that the lithium will be there and the commercial mining will be there. But after this exploration, next 1.5 years, we'll come to know what level of commercial mining we have to do.
Noted. And so just one last question. This fifth stream of alumina, while you will be completing next year, by that time, what would be the total capex you would have invested in this project, basically? And what is now the restated IRR given the alumina prices are lower, plus the Pottangi bauxite mine update, by when you are expecting it to start?
As far as the total capex is concerned, the total capex is around 5,100 or 200, 300 crore alumina project. Somewhere around that will come total for alumina. But as of now, we are seeing the alumina prices are on the lower side. Depends on the global scenario of the ability of the bauxite and ability of the alumina. It can go high also. It is very difficult to calculate the IRR and all that, but whatever we are seeing, whatever our cost of production of alumina will be there, we will be getting at least, we will be having a positive margin to that. Minimum we will be getting a 10,000 plus of margin to that of in our export market or in the domestic market. So we will be having a positive margin in alumina. As far as Pottangi mines is concerned, this month itself we are going to order the MDO tender, and our target is by June we have to start the mines.
Noted. Thank you. That's all from my side.
Okay, thank you.
Thank you. Our next question is from the line of Kirtan Mehta from Baroda BNP Paribas Mutual Fund. Please go ahead.
Thank you, sir. The first question was about our refinery expansion. We have mentioned that we have achieved 80% physical completion. Could you highlight what are the key packages pending within 20% completion and what are their timelines? And the second related question was, what is the actual capital spend that we have done so far, and how is our plan for sort of rest of FY27 as well as FY27 on the CapEx spend for the refinery?
As far as the physical completion of the project, around maybe 77-78% is done. Few of the packages like precipitation tank, hydrate filtration, calcination, evaporation, these are the 4-5 packages which are very critical. And these 4-5 packages and the rest later is on the electrification, that is the laying of cable and final instrumentation and automation job, which is the last thing to be done. So all these timelines, what we are taking is almost the structural work, structural erection, equipment erection of these critical packages will be over by March, April. And from that, 3 months for overall electrical layout of the cables and connections and trial and testing. So that will take maybe 3 months. So June we are targeting, June we will start the commissioning process. As far as the capex expenditure is concerned, till date we have done around 4,500 crores of capex expenditure in this project.
And plan for the H2 FY26 as well as FY27, if you can break up your capex spend plan as well.
What you exactly need?
No, I was asking
capital expenditure till
for the balance in FY26, how much capex you plan to spend on the refinery, and what would be your spend on the refinery for FY27?
By end of the 25-26, our capex expenditure, we have already accumulated expenditure is 4,500 crores, and remaining 4 months, we are expecting to be spend around 600 to 700 crores on the refinery part. And the balance, since the completion date, what CMD sir has told is by June we will be completing this project, and the project closure will be there. The balance 10 to 5% payment will be released in that year, 26-27. By 26-27, the project payment and expenditure will be closed totally.
Thank you for this detail. Also, you mentioned about that they will earn minimum margin of around 10,000 per ton on this project. How does this compare with our existing alumina refinery, this margins? What would be the difference between the new refinery and existing refinery?
Existing will be slightly better because the depreciation will be not there. We will not be having interest. But in this refinery, the cost will be on the lower side because the manpower requirement will be less. It will be having a better efficiency. The caustic soda consumption will be less. The volume with one stream. Now in the existing with 4 stream, we are making 2.1 million tons. But in the new one, with just one stream, we'll be making 1 million tons. So we will be getting the benefit of increased volumes, increased efficiencies. So the cost, whatever cost we are incurring now, only slight increase, maybe 1 or 2,000 rupees per ton increase in the cost will be there. So presently we are getting a margin, clear margin of around 14,000 tons. Maybe that will come down to maybe 11,000 tons in the expansion refinery alumina.
When we say 11,000, it will be the combined operating in EBIT margin that we are talking about, correct? For the combined operation, total alumina refinery.
Total margin. Alumina, we are talking about alumina. Alumina cost, whatever our total cost of alumina and whatever our realized we will get, the difference will be around 10,000 to 11,000.
Sure, sir. And one last question from my side.
Yes, sir.
Sorry, sir, please go on. One last question from our side. Could you remind us basically the sensitivity of our profit to $100 change in alumina price and $10 change in alumina price? Aluminum price $100 and $10 change in alumina price.
Yeah, if it's change $100. Whatever realization we have achieved in the H1, and there is a fluctuation of alumina price almost 50 the last first of the year and after October onwards. So we are able to sustain that, no issue. But if it is varies $100 fluctuation will be there from the present level, that may affect somehow. But our cost, since the gap is much more between our cost of production and the realization, so will not be affected much. And what will happen now if we are suffer a setback in alumina segment, then our metal price will be definitely higher. It will take care of the shortfall which we are expecting in alumina. So as a whole, company as a whole will not be affected much.
Sure, sir. Thank you.
Thank you.
Thank you.
Our next question comes from the line of Shweta Dikshit from Systematics Group. Please go ahead.
Thank you. So I have one question regarding the commissioning timelines. When we are targeting commissioning by June, when do we expect the commercial production to begin? What is the likely to be the ramp-up schedule? So wanted to understand how we are targeting 5 lakh tons of alumina sales in incremental alumina sales in FY27.
Commissioning, when we'll start in the commissioning in June, it will take around 2 to 3 months to ramp up the production to the maybe 60-70% level. That's why we are targeting around 50% of the production will be achieving in the next year. Of 10 lakhs, 5 lakhs will be doing. If we start in the June, maybe somewhere in August, September, we'll be able to, because this is a chemical plant, it doesn't take a lot of time. 3 to 4 months, we can reach to maybe 70-80% of the rated capacity. If everything is okay, that is our target. So next year, that's why we are planning, we'll be having full 6 months in hand after September. That's why maybe we are planning 5 lakh tons of production will come from the refinery, new refinery.
So, but then we are looking at 500,000 ton of capacity and expecting it to utilize that 500,000 ton at almost 100%. So is that, it might be theoretically possible, but does it seem to be practically possible that we achieve for the remaining 6 months we achieve almost close to 100%?
Remaining 6 months, maybe we'll be ending up with somewhere around 70-80%, depends on how the commissioning goes. That depends. That's why we have planned we'll be doing around 5 lakhs. Maybe, and as far as sales is concerned, we are targeting domestic market to increase our sales in the domestic market. And we are targeting some long-term buyers. We are floating on EOI to have long-term customers from maybe Dubai or Rusal or somewhere who have a long-term tie-up with us, so that our whatever increase in volumes of alumina will be there, that will get absorbed there.
All right, noted, sir. Thank you.
Thank you.
Thank you. Our next question comes from the line of Pinakin from HSBC. Please go ahead. Pinakin, your line has been unmuted. You may proceed with your question. As we're not receiving a response from the current participant in the queue, we will move to the next participant. Our next question comes from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So first question was on the divergence between... Hello? Am I audible?
Yes. Sir, you are audible. You may proceed.
And be a bit louder.
Yeah. Okay.
Bit louder.
Yeah, is this better now, sir?
Yeah, it's okay.
Yeah, so the first question was, on the divergence between aluminum and alumina prices. So normally alumina, is probably at a 14-15% of the spot LME aluminum prices over the long term. So, recently we've seen that alumina has been pretty weak, whereas aluminum has continued to go up. So any particular reason, for the weaker alumina prices right now?
Weaker alumina is basically due to the availability of the alumina. Indonesia, around 2 or 3 refineries have started in Indonesia, and some smelting capacities has also gone down in few of the areas. In China also, they have restricted their capacities. In some other areas, some smelters also, the capacities has gone down. So that's why the availability of the alumina is more in the market, which has caused to the price pressure on the alumina.
Okay. And what about, the alumina, the Chinese alumina refineries, their cost structure is pretty high. So because probably they're based on imported bauxite from Guinea or some other imported country. So do you think that, we've not really seen alumina trading below $300 for a sustained period of time? So is there a possibility that, you can see some recovery in alumina prices, over the medium term?
Of late, normally in the Q3 and Q4, the productions at all places are on the higher side. The recovery of the prices, historically, we see in the Q3 and Q4, we get better prices. We are expecting it will go somewhere around 350, it should go.
Sure, sir. Also, on the cost part, are we seeing any inflation in, cost for, CP coke or CT pitch on the aluminum or caustic soda on the alumina side? So can there be an increase in the cost in the second half?
Second half, actually, first half itself, the cost was on the higher side. The cost of CP coke and caustic soda has increased. So I think the level that will be maintained or that will be slightly go down also, because if you see from last September price, the CP coke last September was around 30,600, and this September end it was around 42,000. So it is already on the higher side, and even caustic soda has increased from 37,000 to 41,000. So we are not expecting to further increase. It may slightly go down or remain at the same level.
Okay, sir. So lastly, on the coal, so I think we would be ramping up our captive coal further. So can we expect that the power and fuel costs will remain in the monsoon quarter also? Earlier we used to see a big jump in power and fuel costs in NALCO. So we've now seen that moderating even in the monsoon quarter. So should this trend continue over the rest of the year?
If you see power and fuel cost compared to H1, it decreased by around 53 crores, where the price of the coal, we got a favorable of around 36 crore was there, and due to volume increase of power, the 245 crore adverse was there, but efficiency led to around 135 crores favorable. So it was almost same, only 53 crores difference was there compared to H1 last year, as far as power and fuel is concerned.
Yes, sir. So with captive coal increasing...
And remaining years also, captive coal, of course, compared to last year, this year we are increasing. Last year it was around 2.6 or 2.7 million ton. This year we'll be doing around 4 million ton. So, but the cost of whatever FSA coal we are procuring from MCL, Coal India, that is also not very high. And with the removal of cess on the coal, we'll be getting advantage on the procurement of coal from MCL, where we'll be getting advantage of around 57 crores in H2. So almost captive coal and MCL coal will be almost same, and maybe reduction of power cost will be further there in H2 with the removal of this cess.
Sure, sir. Okay. Yeah. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good evening, sir, and thank you for the chance. Sir, I missed a few details, so please excuse if it's a repeat. So my first question is on the refinery. How much have we spent till date or as on September?
Already we have told around 4,500 crores expenditure has been made in our Fifth-Stream refinery.
Okay. And sir, on the Pottangi mine?
Pottangi Mines, already we are in the process of appointing MDO. This month we'll be appointing MDO, and our target is June next year we'll be starting the mines.
Okay. Okay. So in case there is delay in the mine commissioning, what is the plan B for the initial few months in case there's a delay?
Already we have a separate project where alternate sourcing of bauxite is there. We are making a parallel conveyor downhill from our existing mines, Patwardhani mines, which will be having a capacity of around 30 lakh tons per year. So that will get commissioned in April, May next year. So till the actual production from Pottangi start, or if it gets delayed by few months, the production from this alternate sourcing of bauxite will come. So there will not be shortage of bauxite for the expanded refinery.
Understood, sir. So from the new refinery, what will be the cost? How will be the cost different from the existing refinery? You explained on the profit. If you can just share what is the cost difference given the employee efficiency and the overall economics?
You see, in the existing refinery, we have the capacity of 2.1 million ton, which is done from 4 streams. So there the manpower cost is very high. And in the new refinery, only 1 stream will be doing around 1 million ton. So the manpower requirement will be less. And it is with the latest technology, which is high pressure digestion technology, where the caustic soda consumption will be on the lower side and other efficiencies will also further increase. So what we are expecting that there will not be much increase in the prices. We're getting advantage of manpower cost and efficiencies in technos and all that. Of course, the excess expenditure on depreciation cost will be there. Interest is not there because we have not taken any loan for that. So some depreciation cost will be added to our production cost. So maybe it will be almost same or maybe 1 or 2,000 more than the existing price.
Okay. Okay. So, fine. Sir, on the coal mine, what is the production of captive coal in the first half and how much have we bought from outside?
Our annual target is around 4 million ton. So first half we have done almost around 2 million ton, somewhere around 2 million ton we have done the production. So we'll be nearing around 2 million ton, 1.96 million ton already we have done. So we are on the target of doing around 4 million ton will be completing in the year end.
And sir, our requirement is close to 6.5, 7, is that right? So remaining 3 million ton annually we are still
requirement is around 7.2 million ton. 7.2 million ton. So 4 million ton will be getting from here and around 3 million ton from our FSA, that is MCL, from Manari Coalfields.
Okay. And sir, and entirely we are buying from them under FSA. We are not buying anything from the auction, right?
No, e-auction we are not taking of late. We are only taking through that FSA.
Understood. And sir, the cost after the cess removal, you said for the captive versus the FSA, it is very similar delivered at the plant?
Okay. The delivery cost after including freight is around 2,400. But presently the coal is being procured through FSA, and the coal being produced internally captive mine, there is a difference of 300 to 400 rupees. But after removal of this cess, 400 rupees per ton. So I think both the cost will be almost equal.
Understood. Understood. And just one last question. Are we buying any power from the grid or it is entirely captive?
Actually, earlier we used to buy power from the grid whenever there is any problem near the CPP. But it is a good thing to notice that this year we have reduced purchase power to minimum. Last year we have purchased almost 381 million units from grid coal, which is a very costly one. But this year up to September we have only used 77 lakhs million units because we have produced more power from our internal CPP plant. So there is a substantial saving by not purchasing from the grid coal. making the power mill component fulfilled through our internal source.
And going forward, sir, will that go completely or remain at this level around 77,000?
Actually, last year we have purchased the power. If you see, 186 crore was 24-25 and 186 crores. And this year we have purchased only for 50 crores. So around 136 crores of saving in H1 is there compared to last year, as far as purchased power from the grid is concerned.
Understood. And sir, going forward, is it likely to completely become captive, or this is the level which will continue?
We have got a capacity of around 1200 megawatts. We normally have 10 units running, 10 units installed of 120 megawatts. So we do annual overhauling of one unit, and we keep one unit by standby. Sometimes due to some issues, some breakdowns, sometimes we have to shut down the running boilers or maybe turbines, some issues are there. Then only we take the power from grid. Otherwise, the total captive power is there.
Understood. And sir, just one last. Got it. And sir, when is the mine lease renewal due for our existing bauxite mine?
Existing bauxite mines renewal, I think it is up to 29. I will have to find out and check it.
29.
It is up to 29, no? 29.
And South Block for 35.
And we have North and Central Block and South Block. So Central Block is up to 29 and South Block is up to 35, I think. You have to check up the data. Don't have the data just now.
Okay. So after the expiry and renewal, what is the increase in royalty cost which will happen?
Hey, there is if you see the mineral conservation rule, there is a condition that the renewal will be given for another 20 years to the government company. There is a concession in the mineral concession rule, which has been 2015 and thereafter amended. There is a provision there, government company. They will be given another 20 years lease. They may charge some extra royalty that is not known to us till now, but there is a certainty that we will be getting that mines. But what the premium they will be charging, that is not known till now. That depends upon the government policy.
Okay. So for iron ore, so it is 150% of existing royalty. So I just wanted to know.
I don't know. Iron ore is there, but bauxite it is not. Clarity is not there.
Iron ore after 2015, any renewal of the mines, 150% extra. But government is now thinking to change that. There is a news that government is trying to withdraw that additional royalty which they are imposing on iron ore mines.
Got it. And sir, any forecast on the employee cost? That's been quite stable. So what do we expect for this full year and next year, employee cost?
Employee cost, our employee cost, if you see the percentage wise, it is around 18%. And the retirements coming, few of the senior level people will get retired. It's not going to increase. It will reduce. Maybe it will come down to maybe 15%.
Yes. Because our volume will go,
reduction will be there. So the volumes are also increasing. So it will reduce by maybe 2-3%, not much, because we are planning for some recruitments also.
Okay, so around 1,800 crores.
Sir, sorry to interrupt. We request you to please rejoin the queue if you have further questions. Thank you.
Got it. Thank you and all the best.
Our next question comes from the line of Tushar Chaudhary from Prabhudas Lilladher Private Limited. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. Sir, just wanted to know why our metal sales was lower in this quarter. Production was pretty good.
Metal sales were lower due to less demand from the market. The demand from the market due to excessive of rains, the overall demand, especially wire rods and flat products, the demand was very less. And we are having the stocks which will try to clear up in this month. So stocks are there. That is the reason the demand was very less.
And has it improved now in this month? I mean, as monsoon has receded, but
This month
so
we
do you
are just
expect it to
expecting
improve?
because the beginning of the month, but projections are there that it will improve further.
Secondly, sir, what is our spot to contract ratio in alumina sales? On contract basis, we sell how much and we contract for alumina in export market?
We have a term contract and spot contract. So we have done 2 term contracts. One term contract is for 3 months and one term contract is for 6 months. So for next 3 months, normally every month we do around 4 shipments, 4 to 5 shipments. So next 3 months, 2 shipments will be term and 2 or 3 will be spot. And after that, next 3 months also, we'll be having around 1 shipment of term. But we are going for 1 month term if we get better prices. We are targeting at least 50% should be term and 50% should be spot.
Okay, but when prices are higher, you usually try for higher spot, right?
Actually, now the LME is on the higher side. The forecast is that the LME will go high. So when the LME is high, it is better to go for term because the term contract is linked to the LME. And now the spots are very low. The spots are on just we are getting $310, $320. And like this month itself, whatever our term contract is there, from there we'll be getting around $350. But our spot we are getting around $320.
Okay. And sir, just in connection with the earlier question, what will be our approximate cost of landed coal from captive mines? I don't know exact, but it will be less than 2,500 rupees.
It is around 16 to 1700, around 16 to 1700 rupees per ton.
Okay.
Landed at our power plant.
Landed at our power plant. Thank you. Thanks a lot, sir, and best of luck.
Thank you.
Thank you. Our next question comes from the line of Rajesh Majumdar from 360 ONE Capital. Please go ahead.
Yeah, good evening, sir. I had a few questions. Sir, the aluminium total revenue for the quarter is about 2880 crores. If you divide that by the aluminium sales, then the realization is about $2,900. Does that mean that the domestic premium was about 10% this quarter, or am I reading something wrong here?
If you can just again tell about what you want to know.
I'm saying the aluminium segment turnover is 2880 crores. If you divide by the volume, it is giving a price of 2,57,000, which is about $2,900 plus. Does that mean that the domestic premium was about 10% this quarter? Is that the right way to look at it, or is there something else?
Aluminium. As far as aluminium metal is concerned, in metal, most of our metal is we are selling in the domestic market. This quarter, Q2, if we see, in Q2, the average LME was around 25.97 and Q1 was around 24.47. So around $150 increase in LME was there compared to Q1.
No, I understand that, sir. But if you divide the segment revenue by the volume, it is much more than that. It is coming close to $2,900. So does that mean the domestic premium is, if you can give me the domestic realization in rupees per ton for the quarter, then probably we can reconcile the number, because the domestic premium seems to be very high. It's about 10%.
Rupees per ton, if we see for the quarter, I think it will come somewhere around.
Quarter 2, it is coming around 55,750. Quarter 2,
yes.
That's the domestic realization.
Yes.
And H1 average, if you take H1 average, including the first quarter also, it is around 2,46,000.
That means that the domestic premium is close to 10%, sir, above the LME. The domestic premium, India premium, is suggesting about 10% higher.
Because,
yeah.
Yes, because we are
and how
custom duty.
And how much is the premium now? Will it be around the similar levels or it will be lower? Because normal range is about 6 to 7%, the domestic India premium. Will it be at 10% or will it come down a little bit?
No, if you see our pricing mechanism, there are few factors are there which decide your price. That's the import custom duty we add and some inland transportation costs from port to the location of the supplier, that we also added. Everything, if you added, it is around 10%. You are right. From the
So 10%. So going forward, also 10% is the right assumption, or will it be like slightly lower than this?
That we cannot disclose it now. That is our pricing policy, and we'll discuss and review that what best possible we should be doing that, seeing the market condition and all of the factors.
Okay. And sir, secondly, your aluminium volume for the full year will still be 460,000. That means second half we will do much more than the first half in terms of aluminium volumes.
So full year we are planning for 470. 470 is our total plan for the full.
On the existing pot lines, how much total volume can we go up to maximum? So the rated capacity is 450, I think.
Rated capacity is 460, but this year we are planned 470, and the present rate, whatever rate we are going at the rate of 470. The 2,000 ahead of the whatever we are. So if everything goes okay, we will be able to do at least minimum 470.
Okay. And so secondly, has your alumina cost of production fallen over the first quarter? Because if you look at the inter-segment sales of alumina, the realization has fallen per ton on similar production. That means that the cost of production of alumina has fallen for some reason.
Yes, that is true. Because we have done excellent job in our techno-economic front, which has given us a very good benefit by reduction of consumption of caustic soda, which is a major input material for our alumina. So definitely our cost has come down compared to the first quarter.
And that is sustainable according to you, that cost of production?
Yes. Pardon?
Yeah. And so one last question from my side is that...
prices have also...
yeah, sir. What are you saying?
Go ahead. What I was telling you, the caustic soda prices has also gone down. June 25, the price was around 44,000. The present caustic soda price is around 41,000.
And how much are we getting from the JV now, from the Gujarat Alkali JV? And what is the cost of that caustic soda?
JV, whatever prices we realize from the market, the same price we take from JV also. The discovered price from the market. That is 41,000.
Okay. So you think that the cost saving that you got in the production cost is more or less sustainable over the balance part of the year?
Yes. That is sustainable. Whatever like caustic soda specific consumption which we are getting now is around 96 kg per ton of alumina production. So that we will be able to sustain.
Okay, sir. Thank you so much.
Thank you.
Thank you.
Our next question is from the line of Manav Gogia from Yes Securities Limited. Please go ahead.
Yes. Hi. Thank you so much, sir, for the opportunity. A very good evening. So my first question comes for the metal segment. If I look at the aluminium EBIT for this particular quarter, that has gone up sharply on a quarter-on-quarter basis. Could you highlight the factors for the same?
You're talking about realization?
No, I'm talking about the segment results for aluminium.
Can you please repeat your question?
Yes. So for the segment results for the aluminum segment. Hello?
Yeah, please continue.
Yes. So sir, for the segment results for the aluminum segment, we have a number of 1189.37 crores and a top line of 2,880 crores. That's roughly of 41%.
Yes. You're right. If you compare the quarter one of aluminum segment price and quarter two, the average price for the quarter one was around 2,37,000. Where it is the quarter two, it is 2,55,000. There is a jump of 18,000 in price per ton of aluminum. That is one of the major factor that aluminum realization in the second quarter is better than the first.
Okay. So it's much more pricing led rather than on the cost of production side.
Yes. I think also slightly we have increased on the volumes also. Volume also. Like first quarter volume was around 1.15. Second quarter it is around 1.19. Slight increase, around 3%, 3.4% increase. But more we got from the pricing.
Sure. Got it, sir. So my second question is, I might have missed the number earlier. Could you give me what is the targeted sales in the second half for the alumina and the chemical business?
Alumina yearly sales we have planned of around 12.5 lakh tons of alumina sales. So first half we have done around 7 lakh tons. So the rest of the year we will be planning around 6. We will be reaching around 13 around sales. So around 6 lakh, 6.5 will be selling alumina. And as far as metal is concerned, metal sales will almost be same which is there in the first half. 2.26 we have done in the first half. So if we are producing 4.7, the rest of the things will be sold.
Sure. Got it. Thank you so much, sir.
Thank you. Our next question comes from the line of Siddharth Mehrotra from Kotak Securities. Please go ahead.
Sir, just a couple of quick questions. Sir, can you just give me some guidance on your employee costs? So, for example, for this year and next year? I see that they are on a declining trend, but what should that number be?
Yeah. 18. Employee cost, we are at present, it is around 18% of the total cost. If we see the quarterly expenditure as far as employee benefit is concerned, it is around 440. It was around 440 crores this quarter. Earlier quarter was also around 445 crores. So annual, if you see, it will go to around maybe somewhere around 1700 crores.
And for next year?
And around 18% of the total cost.
Got it, sir. And for next year, around say a 1650 type of crore, that reduction seems plausible or higher?
Next year?
Yes, next year. This year you are saying 1700 odd crores.
Next year we are going to add some manpower, but that cost will be offset by our volume. Because we are adding new retirements will also
Retirement is also there.
200 retirements.
Annual around 200 retirement.
It will go slightly, will go to around maybe 16%. Yeah. 16% will be the total cost.
Okay, so basically you're saying that we can in some sort of declining trend there as well, right? Is that understanding correct, sir?
Yes. Declining trend of course will be there. Because whatever our employees who are retiring, they are on the highest slab of their basics and salary. And whatever we are recruiting, they are on the minimum scale. So the average salary will go down.
Understood. Sir, one small clarification. In an earlier earnings call, we had said that we had increased our alumina inventories. So in this quarter, I see that our alumina sales are much higher. So was there a liquidation of these alumina inventories which sort of led to much higher alumina sales this quarter, or was it some other reason?
Alumina sale liquidation about alumina inventory.
Correct. Was there a liquidation of this inventory which led to much higher alumina sales this quarter?
We have increased the production. See, the production of calcined alumina from H1 production compared to last year H1, it has increased by 31%. Last year H1 we have done around 8.84 lakhs, and this year at H1 we have done around 11.61 lakhs. So the production has increased substantially. That has led to the increase in the sales.
No, sir, I understood that point. But say, for example, when I'm talking about alumina sales, you're giving me a full year's guidance. In the second half, you're saying that we will do 6 to 6.5 lakh tons. In the first half, we've done 7 lakh tons. So what I'm saying is that this number is higher because of 2Q, which means that was there some sort of inventory sales from alumina as well contributing to this?
Even not true. It is not that earlier inventory was there. March our stocks of alumina in the March 25 was at the minimum level. So whatever sales we have done is from the production. Because you see, we have done the alumina production of around 11.61 lakh tons. And metal production, cast metal production was 2.34. So 2.34 means for that we require a alumina of around 4.6. So 4.6 from 11.6 we reduce 4.6, so that somewhere around 7 it will come. So 7 lakh we have sold.
Got it, sir. Got it. Thank you. That's all. Thank you.
Thank you. Ladies and gentlemen, we will take that as our last question. I would now like to hand the conference over to Shri Bharat Kumar Sahu, Company Secretary, NALCO, for closing comments. Over to you, sir.
Yeah. Thank you, operator. Thank you, Systematics Group, for taking a keen interest on the financials of NALCO. And we always solicit this kind of response and this kind of support from your end, year-on-year basis. Thank you all for giving time to NALCO and participating in this conference call. Once again, thank you and goodbye. Thank you.
Thank you.
Thank you. On behalf of NALCO, we conclude this earnings call. Thank you for joining us. You may now disconnect your lines.